Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of July 31st. So as we go into the first week of the new month, this is one of the most important weeks of the month for economic data. We get the ISM survey indices and we get the employment report. You take these together, these are the first look at July's economy. So let's start with the ISM. On Tuesday, we get ISM manufacturing. And as a reminder for the ISM indices, above 50 is expansionary, below 50 is contractionary. The consensus expects a slight improvement from June's 46 to go to 46.9 in July, still contractionary. We, on the other hand, expect the data to be a little bit better than expected. Manufacturing is definitely struggling, but as you see here, construction spending on manufacturing is surging. It's a good sign that maybe manufacturing has plateaued and will come in a little bit better than expectations. Thursday, we get ISM services. Consensus expects a slowing from June's 53.9 down to 53, still expansionary. Our expectation is that we do expect the data to be a little bit better than expectations. Consumer is still strong and retail sales growth appears to be getting even stronger. Friday, we get the big report. This is where most of the press will be focused on, the employment report. The consensus expects non-farm payrolls to slow from June's 209,000 to 200,000 and the unemployment rate to stay flat at 3.6%. Most importantly, the markets will be watching in terms of what the Fed will do next is wage growth. The markets want wage growth to stop its recent rise, as you see here. So average hourly earnings are expected to slow from June's 4.4% to 4.2%. Watch this very, very carefully. Overall, we expect payrolls to come in a little bit lower than expected, given the fact that employment indices, like the early survey data, have not been that great. And if you look at job listings, unfortunately, are starting to fall. Key takeaway this week, the Fed met last week. They raised interest rates as expected, 0.25%. The question is, will the Fed raise more this year? The Fed has said maybe one more time, but the markets don't expect it. Chairman Powell last week said that he and the rest of the Fed are focused on data to decide the next step. If the ISM data remains lackluster and the labor market continues to slow, it's going to be very difficult for the Fed to justify another rate hike. Thank you for listening. For more information, please follow us on Twitter at CeteraIM. See you next week, and thank you.